Fear in crypto markets. Should you sell everything or should you buy the blood in the streets? Let's analyze this together in this video. My name is Harry Hamann from H2 Intel, helping you succeed with investing. The crypto markets are selling off heavily, and the question is what to do now. Now, if we look at the big picture here, the Fed is raising rates, they reduce the speed of the asset purchases, we have war, 10-year yields are rising, and the dollar is about to explode higher. So it's not the perfect environment for risk assets, especially crypto assets. Should you sell everything or do nothing or maybe even buy? Now let's analyze this together systematically. Okay, let us start with some technicals, the charts and also the sentiment we have currently in crypto assets. And then we look at the fundamentals and then we will make a conclusion. Please note that none of this is financial advice. This is for educational purposes only and for entertainment. Okay, now let's look at the charts here together. So here we have Bitcoin, and basically what you can see here is the daily chart, and as you can see we basically peaked here in April 21, had a sharp sell-off, I don't know, 50% or what it was, rallied back higher, had a higher low, and now we went back down. So we created basically a higher low, so higher high here, higher low here. The question is, will this low hold or not? So do we go to the upside or not? And what we can see here, so generally speaking, you can always, I would advise you measure what is going on. 55% sell off here. We had a 52% sell off here. And then we had basically price is at the same level as in January 21. So basically 1.5 years almost, where price is doing basically nothing, then going sideways. And this is important. You always need to recognize, is there a trend up or down? And if not, is it sideways? And this is a clear range. So as you can see here, it's not a downtrend, it's not an uptrend, it's just a range. You see, this is what's happening, and this is a consolidation. And when I look at this, I see more advantages than not, because the longer the sideways phase goes, the higher the upside or downside breakout will be. Of course it can go down, but I think this speaks more that it potentially can have a very sharp move higher, because the longer this phase goes, the more explosive the move is. This is usually the case. And I would say all of this consolidation is a healthy phenomenon, and I think it's good, you know. But of course, sentiment is bad. People are asking me, okay, what is going on? Should I sell everything here? Is everything about to crash? Do I lose all my money? And yeah, that's the question. So let's just to analyze this. You know, there's a concept in finance or investing that is called the concept of analogues. And the idea here is that history does not repeat exactly the same, but it rhymes. So meaning patterns in the past, they occur in the future as well, but in a little bit different way. Now for Bitcoin, we can make the same analysis here. So for example, the last sell-off we had, last bear market, you know, it was going from here to here. So we basically had an 83% sell-off roughly. Now if we do the same here and we have an 83% sell-off, then we basically come here in this, the start of the move basically. And of course this is a support zone, because we have here some highs and the start of the move. And so this is what can happen, and you always need to prepare, because in investing there is no certainty. And the number rule of good investors, they recognize that the future is uncertain. They have no idea where the markets are going. No one has it. And if you really understand this. It will make you much better as an investor. But what you can do, of course, is use the analogs. For a worst case scenario, is that likely that we go down to 83%? To be honest with you, I don't think so. It can happen. I think what is much more likely is something like this, where we have this consolidation range, and where is my here we have this consolidation range. So basically we have these this high and this low, and price is consolidating, and you see we ticked a little bit above, went down, and something like this can happen as well, that we take out these lows and all people are thinking, oh shit, this is about to blow up, everything is going down. Then we have a sharp move higher, and then it goes up, you know. Something like this can always happen, and it would scare a lot of people, especially with not so much experience. And where would that lead us? Maybe 60%, 50%. In the grand scheme of things, I don't think this is much, you know. Of course, this would mean another 30% max sell-off. I think something like this is plausible. You maybe even get a wick down a bit more, you know, something very aggressive, but it's so short term. It really, in the grand scheme of things, if you're just holding, and if you're not a trader but a long-term investor, it does not affect you. Of course, there will be panic, but you know, if you just stick it out, in no time, I think this will be going up higher. But this is what you have to be prepared for mentally, because you know, psychology affects your investing results massively. Because if you sell here, if there's panic and you just think, okay, this is not worth it, you know, it's just the experience and the know-how, and this is exactly what I'm about to teach with my channel and also my business on h2intel.com, that you just learn the stuff, be a better investor, and I think everyone can really do it. And now let's just look exactly here what can happen else. Now the other thing is, okay, you can have this 85% drop down, but the other scenario was, okay, we have this in total 50% drop. So this is scenario 1, I think unlikely. Scenario 2, this could definitely be the case, but we can still maybe get a little bit more down and then have a move up. So this is, I would say, scenario number 3, move up. But in any case, no matter if we have scenario 1, 2 or 3, of course the pain is high, but the question is, will it then go down forever? Or at this point, when it reaches the downturn here, the short-term downturn, will it go up? And I think it will go up. And the question is only, how much pain do you get? As I said, scenario 1, I think a bit more unlikely for various reasons. We can go into that. But I think scenario 2 is more likely. Scenario 3, I don't know. Could happen, may happen. So I'm not sure about this, 2 or 3, I think, but let's see. And the point is, you know, you need to ask yourself not only about the technicals, but also and sentiment. And generally speaking, one more point about sentiment. So if price is 43% down, you need to ask yourself, is this time to buy? This is the only question. Usually it's not the time to sell when your asset is down 43%. No, if you're here at this point where you're making a new all-time high, barely, with not much follow-through, then this is a time to take some off the table, you know. And this is, if you learn this, it will make you much more profitable long term to buy when there's fear. I know it's hard, everyone has these feelings, me included, but you will be better, making better decisions and getting better results if you do it. And even if you don't buy, holding is always good. So stay calm and collected, assess the situation, and in most cases do nothing. This is where the big results come from. And the best investors are buying in that instance. So me personally, I keep holding and buying currently. That's what I'm doing. Before we go to the fundamentals, let's quickly go to the stock market. So what we have here is basically a sharp uptrend from the Corona crash. It's basically just moved upwards, and now we have a break of a trend channel basically. So this trend channel, as you can see, was broken down. Now we correct a little bit, but you know, it's normal that markets don't go up all the time. So having a correction is just 14%. It's not the end of the world. Of course, with the Fed raising rates and so on, it can go down more. I would even expect 20% or something like this. It could even go down more. You know, you never know what they are going to do. You may be even testing those highs. Or this year, it can happen, but overall, historically, you know, the stock market goes up, and long term, this is true. Of course, if you buying in at the very high, your results will be bad, but yeah, this about the stock market. Now let's go about the 10-year yields. As we can see here, we have here a big level of 3.2%. Now, if we break that, I think the bond bull market is over, and we're coming awfully close here. So yeah, it's interesting what's going to happen here. So I'm not sure, we might break it. It would be a big difference. And I think a lot of investors will have to ask themselves some serious question how to deal with all of that. So this is a bit dangerous, but it can also happen that, as you can see, we had here also in this area some highs. So it might happen that we get a sell-off here and we don't break the high. In that case, you know, we can still have a downtrend back to the lows again. I mean, it can happen. Let's see. No idea what's going to happen, but still this is pressure, because higher yields, you know, is in with that speed and that amount of yield increase is a pressure for risk assets, and also a little bit of a negative with crypto. Now the dollar index, its currencies now also, you know, you see here it's about to break higher, and this looks, you know, it can fail here. Actually, what I would expect, maybe it fails and still goes down and keeps in the range. I'm not sure. Let's see what is going to happen, because it always can have some blow of moves. If we break this for sure and go rapidly higher, you know, then for risk assets, then we go up here, and then for risk assets, you know, it will get difficult. So depending what the Fed is going to do and what's going to happen, really it depends. And potentially one scenario is that all risk asset stocks, you know, in the Corona crash, stocks, crypto, everything, even gold went down. And these correlations come to one when there's real fear, when there's real panic in the markets. And this can happen if the dollar breaks really out. I'm not sure. Let's see. I'm still quite optimistic. Of course, we can get correction in several markets. But the question is here about crypto, right? So we analyzed now this chart and also the trend, as you can see. You know, you ask yourself, you're here right now, we're analyzing this drop, but this is the trend, you know, and this is important. And now let's look at the fundamentals. And here we see, okay, let's just look here at CoinMarketCap, just what is the size of the market of crypto, or in that case for Bitcoin specifically. Now it's 740 billion US dollars, okay? So 740 billion sounds like a lot. Now let's look to compare it at some of the biggest companies, public equities, in this case Apple, US stock, and they have 2 trillion, so this means 2,558 billion. So 2,500 billion compared to 740 billion. So we still have a big difference here of 2,500 divided by 74. So it's basically a 3 times difference of just the valuation of one company. Of course, one of the biggest, but it's still one company. And crypto, especially Bitcoin, I think is a bigger idea. You know, it's a monetary network, it's a digital store of value, and I would assume that more capital can flow in that, and that the market is much bigger than one single company. Now, if you look at the fundamentals of crypto or Bitcoin, then I think there's there are two questions you need to be asking yourself always when investing, not only crypto, but generally speaking, you can apply this in any asset class. So the first question is, do you buy an asset that is high quality? And you don't want to be buying assets that are low quality. So in the case of crypto, there are maybe 10,000 or even more different coins. Now ask yourself, are all of them high quality? The answer is no. Only a few of them are high quality. And that is what you should be buying, not the trash specifically. This is the first question. And in the case of Bitcoin or crypto, we can look at quality. And the question you need to be asking, what is it in the first place? What does it do? What is Bitcoin? Is it useful to people? And does it provide economic value? Yes or no? And if the answer is yes, then we can assess, okay, there is quality to this asset. Now in the case of Bitcoin, it's a monetary network. People are choosing Bitcoin to store their cash, their purchasing power in a digital form in Bitcoin. And they're doing that, of course, because of the money printing. That is why Bitcoin is in existence in the first place. And we also know that the supply of Bitcoin is limited, 21 million or even less. And the demand side, if we look at the demand side, this is going up because it's still a relatively small asset. People are wanting it. There's a lot of economic activity, companies building in it, talent attracted, capital attracted, and there's a growth rate. And because it's growing, it not only protects your purchasing power, but it even grows it. So I think it's a very good asset to invest high quality. Of course, Bitcoin we're speaking about, not all coins. And if we look now at this graph here from Global Macro Investor, we see here the internet users over time, and this is the white line. And you can see here from 92 to 2006 was basically the total global internet users, rapid rise of the users. And the more users, the more valuable the network, the more economic activity, the more profitable your investments in that sector will be. Now, if we look at the crypto users, we have here a high correlation and a very, very strong growth rate of the users. And you can value, of course, the network of Bitcoin in a large part because of the number of users going up. The network becomes more valuable, more users are using it, and so on. This is not all of the valuation, this is just one part, but still a very, very important part. And the questions you can ask yourself here is this trend just going to collapse from today to tomorrow, or is this going to upward? It's like a train running, can you stop that so easily if it's already running pretty fast? Probably not, So look at the big picture here, the long-term trend. And if you get the long-term trend right, you will make a lot of money. And short-term, of course, with all the factors, the Fed raising rates, reducing purchases, and so on, this is a negative. It's clear, So that there is risk, but the risk is, in my opinion, short-term or medium-term, but long-term. I think the picture, the fundamentals, is still very positive. So I think the asset class is still small. I think it's high quality, it's useful, provides economic value. We see a big growth trend here in the number of users. So overall, I would say the fundamentals are rock solid for the next years. And the price is still 40% off. For me, this sounds like a discount. Does not mean it can go down to minus 50% or something like this. The scenarios we mapped out. Even worst case scenario of 85% drawdown is possible. You need to be prepared for that as well. But I think unlikely. And I think always, like I said, stay calm and collected. This is very important. So question number one was, is this a high quality asset? The investors need to be asking yourself. In this case, I would assume it's a yes. So for me, it's a clear yes. You need to make your own decision about this. So when it's high quality, the question is it below is the price below the intrinsic value? Yes or no? And I think we assess that as well. So as an investor, you always have this value thought, You always, what you're buying should be cheap compared to what the true value is, the true potential. So if you're buying a high quality ribeye steak, and you get it for a relatively cheap price, let's say a big piece of steak for, I don't know, $6, $7, $8, $10, then of course it's a good decision to buy this. It's the same for all assets, for crypto as well. It's not more complicated than that, but of course to value the potential, this is of course complicated, and there all of the work comes in. And that's why I always say, if you buy something, research a little bit about it. Even if it's a couple of hours, you will understand the asset better and assess, is it high quality, yes or no. If it's no, don't buy it in the first place. If it's yes, it's potentially a buy. But the second question is always about the valuation. And this is the Warren Buffett principle, or every principle every investor is using. It's universal. And look at the price, then look at the value. You need to assess the value. In this case, or the Bitcoin, we said, okay, the price is the market cap, and market cap is nothing else than the price. So price per Bitcoin times the number of Bitcoin is the market cap. That's just the aggregated value, the current market price. And is this low, the price we pay today compared to the value we get? The value we get, we see in this nice chart, the crypto use is going up. People are using it, more capital pouring in. The value is going up, and the future value is expected to be high, I think. And that's why I think you still, compared to the potential, compared to the value, price is below it. And even if it's 40% down the price, or 50%, in the grand scheme of things, it does not matter. So to summarize, I think the fundamentals of crypto and Bitcoin are still very strong. High growth rate, still undervalued, potential is there. So I see tremendous potential. Price is down, yes. There's some fear, yes. But good investors are not selling great assets because they're down 40%, They're just holding, buying more, and at the end of the day, bank account is going up. This is what they're doing. And I would urge you to think the same way, not what shall I buy now? Should I sell everything and going into panic mode? This is not the way to go. The way to go is stay calm, stay collected, assess the situation, plan out some scenarios, what can happen, what has happened historically. We talked about the analogues technique, and then make your decision. Are you comfortable with it to hold it? And even if you're very uncomfortable, then sell a little bit, something like this. But I think the good investors are holding and even buying. And I think the no-brainer decision is always do nothing. And you can only do that if the asset is high quality and if your thesis is intact. Thesis is this will provide much more value in the future than it's priced in today. And if all of this is true, then it's fine to hold, in my opinion. If this is not true, then of course the thesis can change. And if the asset is not high quality and if you come to that conclusion, of course, sell it off. But in this case, I think although we have fear, although we have panic, although we have all this uncertainty in the world, good investors, that's why I say long-term, no leverage and all that stuff, because it will help you stick with great assets for a long time, and this will really, really help grow your wealth. Okay, that's it about this video. So if you like this video, please help me out here and like this video and also subscribe to the channel. This would help me out a lot. And one more thing, and if you want more information about investing, learning how to invest, then please check out the free guide, investing guide, in the description, and also check out the free blog. And thank you very much. Until next time, happy investing, successful investing.